Greetings traders. In today's video, let's have overview about most important trading indicators, because if you are trading online and if you are trading especially in shorter time frames, the indicators are absolute must, because without them you have to have extremely high understanding of markets and some sort of coding experience how to understand markets, or you simply have to work with fundamentals and invest for 20 years. But even then you will have to know and understand basic indicators, and so you cannot simply avoid this important topic. So let's discuss it. First and foremost, I will divide indicators into trend indicators and overbought, oversold indicators. And these will be precise indicators that I will show you with practical examples. So let's start with the most important indicator, which is moving average. So now we have Nasdaq 100 index chart with 30-minute time frames. And as you can see now, it's blank. But now I will simply add moving average and show you how it actually looks like. So now we have exponential moving average. It's now on setting of 9, so it means it has 9 previous periods. For instance, if you have daily strategy, it would be average price of 9 days, but it's too short for me, so I will change it to 50. So in other words, now we have last 30-minute exponential moving average. They are differentiated in different ways. I wouldn't bother to go in those details, but I would simply say they all have same idea. The line is average price of previous, in this case 50 periods of 30 minutes. So approach here is simple. If prices are above moving average, we are buying, and because that's indicating of bullish trend, and if they are below them, we are going to short, or at least say that we have bearish trend. And this is simple foundation how it works and what makes it tremendously effective. I would say this is the most popular and the most important analysis tool for, I don't know, last 150 years of trading, because it simply works. And out of that, you could have infinite amount of very good trend trading and range trading and swing trading strategies, because applications here are endless. For us, the trick is to know how to use them correctly. But nevertheless, this is foundation of every indicators, and you should absolutely have it, whether you are analyzing or trading it. But now let's go to more specific indicators. Second trend indicator is Bollinger Bands. Here the approach is similar. One line or middle line simply shows you direction of trend, simply whether the prices are above or below trend line. So we have bullish or bearish. The first is the middle line. This indicates whether we could have bullish or bearish pattern, or in other words, if prices are above or below the trend line. Similar as with moving average, because this is based on moving average as well, so there is no wonders why it is so. But there are other nuances which makes it slightly more advanced. Here we have upper bracket and lower bracket of Bollinger Bands. That's why they are called bands. These are those bands, and they could actually work as a support and resistance lines to see how much oversold or overbought the prices are. Here we could simply see this is the good resistance line, and here we could see that this is strong support line. Or we could use it either analytical tool or as a trading tool. For instance, if we could see the prices are above middle line, so the pattern is bullish, but they are closing higher resistance line, so that means prices might be overextended themselves and they could revert. So here we could see the price movement might end. We could even go short. Well, this is not exact trade recommendation, but it's simply how to see the markets. So this is not trading recommendation, but to give you perspective that it gives you another layer how to look at the markets, because these Bollinger Bands give you another tool as a support and resistance lines. They are not exact trade recommendations, because there are also infinite number of trading strategies, but they simply show you that you could use it not only as an indicator whether the trend is bullish or bearish, but if it's also overbought or oversold. So simple trend trading idea with another layer. This is Bollinger Bands in a nutshell. So it's up to you how to use it correctly, because here also opportunities to make money are endless. But now let's go on to overbought, oversold indicators. Now we have relative strength index added to our arsenal. And relative strength index works simple. It simply shows overbought or oversold pattern. Relative strength index is usually made into brackets, like 100 and 0 are the beginning end of the price moves. So closer to it is to 100, the more prices are overbought. Closer it is to 0, more prices are oversold. And usually traders typically use upper brackets for 70 or 80 as a maximum place where it could be overbought, and 20 and 30 respectively where it could be oversold. So if prices are going upwards and relative strength index shows it's above 70 or 80, prices might extend themselves in upwards direction, and probably reversion could happen. Or from other perspective, if prices are going lower and they are below 30 or 20, depends how you actually configure it, prices actually might overextend themselves and we are bound to rebound to upwards move, as we had, for instance, here. Prices are going sharply lower and now we see simply that we are below 30. So here actually, yes, price fall ended here and now we had nice reaction to previous direction. So you could either use it as an analytical tool or as a trading tool. It depends on you, but it's really popular and it's used in this way. But now let's see the second overbought, oversold indicator, which is stochastics. Stochastic indicator works in almost identical pattern as relative strength index. It simply shows overbought and oversold territory, whether the prices are above 80 or below 20. So I wouldn't repeat myself again, but simply show you the same pattern. You could use it as an overbought or oversold indicator and see how it actually works. Here also the pattern is similar. So here we saw that prices are going below 20. Here it had a price fall. Here we saw it was oversold and prices reverted back to previous levels. So here also we saw it was overbought, but prices didn't actually go nowhere. So you can use it more as an analytical tool to see whether the prices are overextended themselves and whether the price move is expected to continue, or you could simply trade on that information. So it works kind of similar. Both of these indicators, overbought or oversold indicators, show the same pattern, whether you are overbought or oversold. Hence the name, very simple. Everything actually is simple in trading. You could see the name and what it's meant for, so you could understand logic behind it. No need to complicate anything. But now I have a question for you. Do you want to see how this is done properly with different time frames, different markets, all of these indicators, relative strength index, stochastics indicator, Bollinger Bands, and moving average? How the real trades are made, how are live trading analysis made, and free trading signals with real money-making opportunities? If so, visit my link and join it. Remember, this is free, so you have a lot to gain and nothing to lose. But now, let's move on. Now I will add fifth indicator because this is really important. This is not indicator where you actually make money. This is indicator where you calculate risk. This is average true range. If you are having trend trading strategy, this is extremely important indicator because it simply shows volatility of prices. As you see, for instance, there we had huge price fall in Nasdaq and volatility spiked, thus average true range increased. But now we have slightly more balanced trading period and nothing much happens, so average true range is low. Average true range simply means what's the range of trading prices in previous direction. For instance, now average true range of last 14 time periods is around 40, give or take. So this is how it works and why it's important, because it has one simple understanding. You could see how much volatility you could expect to each side. If average true range is 40, that means that in next time period you could roughly expect that it could move by 40 points if you are trading Nasdaq. In other markets it will be named differently, and it's important because out of that you could use your average true range as a measure where you could actually add it your stop loss. So if the markets have higher volatility, average true range is higher, you could calculate it for what is the sum of two average true ranges. So here, for instance, average true range is 180. So for instance, I have to have your stop loss at 400 points or 2 times average true range. But when markets are calm, the average true range could be 80, not 400. So you see why it's so important. It's extremely important how you place correct stop losses. And this could be one of the greatest tools, how you can actually manage risk and put correct stop losses. Just simply see how much markets move by average true range and multiply it by 2 or 3 times depending on your trading strategy, and you could have one of the best and most effective ways how you could use correct risk management without doing complicated mathematics. So never underestimate average true range. But now let's conclude. We look at 2 major trend indicators, moving average and Bollinger Bands, 2 overbought oversold indicators, relative strength index and stochastics, and we saw one indicator which shows you volatility of specific markets, and it's extremely important to understand this average true range indicator because it doesn't provide you with trading opportunities, but most importantly risk management opportunities. So how professionals trade? They use overbought oversold indicators for analytics, trend indicators for trend entries, and average true range for stop loss indicators. This is how you can actually stack all these indicators together. And if you want to see how this is done professionally, of course, join my Telegram channel and watch my analytical videos and use my free trading signals. Join me there, and I hope this lesson was valuable for you, and let's meet later.